Good evening, everyone, and I want to welcome you all to another episode of the Black Market Podcast presented by Hack the Markets. I am one of your co hosts, AC, known also as the Market Oracle. And today, it looks like I may be by myself, but that's okay. We'll go ahead and start the show off like we usually do with um, going through a couple of these earnings reports that we have for the week. So right now I'm looking at Tuesday, so that's gonna be the 7th. That's actually my dad's birthday, so I will wish him a happy birthday right now, and of course we'll get in contact with him tomorrow as well too. But let's see. So we got Dick's Sporting Goods. So Dick's Sporting Goods is of course consumer discretionary. You don't really need it. Things are, you don't really need Nike, you don't really need Adidas if you're not wanting to spend money. So that's going to be something that we can look at just to see on the health of some consumer discretionary stocks. Let's see what else we have. Crowd stock. We got Crowd Strike. I'm sorry, Crowd Strike. Crowd Strike. I believe that is. I know it's technology. I know it's software. I want to say that it is cyber security. Not 100% on that one, but I want to say cybersecurity. But they do have almost a 10% implied move on them. So that's something that I would look out for. Another one that I would look out for that I see on this list for tomorrow is SE, and that's C Limited. Now, a lot of people don't really know what they do. I'm not going to say that I'm 100% on what they do either, that I know what they do either. But the thing is, they do um, they do have a nice bull run to go off of all throughout 2020. So that's something that we can look at. Now, beyond that, I have not looked at that chart since 2020. So I can't say that that's just going to be the best thing that someone could be buying right now. So don't take me for my words saying that this is a buy or anything like that, but it does have an 11% expected move on it. So if you want to open up some neutral positions, you want to do anything like some bear spread, I mean, not bear spreads, I'm sorry. If you want to do some straddles or some strangles, I'm thinking about some trades that I'm trying to actually put on. And yeah, they I would say the strangles and the straddles would be the best thing to trade these, especially if you don't know what direction you're going. Yeah, I'm thinking about some trades that I was sharing with the group earlier. So what do we have? Also Squarespace. We got Squarespace, SQSP. So that is the website. 10% move on that. That's a pretty good move. I have no idea what this ESAB is, but they have a 30% implied move on that. 32% to be exact. That's a pretty nice size move. So let's move on to Wednesday because we're getting to people that we have never heard of before. Let's see. So we have Campbell Soup Company. So of course everyone knows about Campbell Soup. That's going to be a consumer staple because that's actually a food product. People need food to live, so that is not going to be consumer discretionary. So this right here give us a little bit of insight into how consumer staples are holding up. They usually like to hold up pretty well, especially in inflationary cycles and also when we have downturns, just because they're viewed as a defensive stock and people are going to always have to eat. People are always going to have to use hygiene products and things of that nature as well. So anything that's consumer staple, as well as when you get to things like Walmart, which are um, places where you actually go to buy products that you need. So instead of a Target, you would go to a Walmart and things of that nature. So let's see. We also have Asana. Now, I like Asana. They have a 13% move implied on it. And I like that one just because we did make a lot of money off that in the group. I think back in 2020. So that was a pretty profitable stock for us back then. So I did like that one. Let's see what else we have on this list. Prudential, that's going to be your insurance. Let's see, MongoDB. That's big with data centers. So let's see. Oracle. Speaking of data centers, I'm going to Thursday right now. And Thursday, I'm looking at Oracle. So Oracle, they're going to be on Thursday the 9th. We have JD.com. I believe that is Chinese stocks. So we can see the health of China and their economy right now. We do know that China has been trying to come off of that COVID shutdown, and they have been rolling out, measures to be a little bit more lenient. So we can get an insight as to, how the Chinese economy is prevailing right now. Let's see what we have. Ulta Beauty. So that's going to be, of course, more consumer discretionary, but it is going to be beauty products. So that's definitely a store that a lot of females know about, especially because of the all of the makeup products that they have in there. Let's see. We have DocuSign. So DocuSign is a big tech company. That's pretty good. We also have BJ's Wholesale. So that is similar to a Costco and a Sam's Club. So we can see how those large bulk performing retailers are doing. And Friday is not necessarily a lot going on. We have WeWork. Um, Other than that, I'm not really seeing anything going on Friday, and that's pretty common. Going over to the economic report, we really don't have a active week on that front either. We pretty much have a downturn in all of this. We have what ADP employment that's coming out on Wednesday. Um, Looks like on tomorrow we'll have consumer credit, and we'll also have Powell talking. He'll be testifying to the Senate at 10 a.m. We'll have some wholesale inventories also. Um, yeah, not too much going on. We do actually get the jobless claims on Thursday and the employment report on Friday, as well as the unemployment rate. So that right there does end the week with a bang. But leading up to Friday, we don't really have a lot going on this week. So pretty muted week on the earnings front, as well as the economic front. So let's see. In other news, we do know that Norfolk Southern, which is the railroad company that had that crash that ended up sending a lot of dangerous chemicals up into the sky in Ohio. They are now trying to make broad safety adjustments after they've had a third train derailment. And train derailments are pretty common. It seems like they're almost every day, to be honest. Like if you look at the stats from past years and not just on recently what's happening. So we do also need to make rail, I guess, a little safer. So it's gonna be something to look at, I guess, for the transportation stocks. So that's gonna be the Dow Transports, and that's also going to be, just all the railroads. So it is gonna be a few that's not included in the Dow Transports, but that's gonna be your Norfolk Southern, your CSX, all of those. So definitely going to be something to look at if you do want to see a sector. Let's see how this derailment news and the safety of rail and all of that, how this news plays into it. If we do get a dip, that could give us a good buying opportunity, seeing that rail is still going to be the more efficient way to move product around the U.S. and it's pretty cheap. It's very cost effective, I would say rather. And I mean, it's not going anywhere. And with so much ecom going on right now, the ecom boom that we're seeing, I feel that we will definitely benefit from looking at these transport stocks. So, I mean, if we get a dip because of this, we may slide for a little bit, but that would definitely give us a good opportunity to buy in. That's why Warren Buffett plays this thing like Monopoly because he owns all the railroads. He literally owns a majority of the railroads. So it's not something far fetched to look into to try to get the railroad companies now, especially with bad news lingering and prices may be getting hit because of that. Um, but like I said, it's pretty common to have these derailments. But because so much light is being shed on it right now, I feel like we may be able to get them to, I guess, invest a little bit more into their rail safety so that we can alleviate some of these in the future. So, with that being said, um, I just wanted to talk real briefly about a topic. I know we usually talk about a topic. We always have our, insight. So today, the insight that I wanted to talk about today is the infinite banking concept. And basically, the infinite banking concept is pretty much how you can structure whole life insurance policies um, so that you can borrow against it. And you can borrow, you can borrow against it for, any type of major expenditures or emergencies or any type of, investment opportunities you wanted to pursue. So you pretty much can borrow from that instead of a traditional bank. So if you set it up correctly, you really won't have to borrow from a traditional bank anymore. You can get some competitive, some competitive safe growth rates. You can get some tax sheltering in there. Tax sheltering is always something good because the more that you can save on taxes is always going to be the best route to go. And so if you can borrow money and you can borrow it, at a very tax efficient way, then why not do it that way instead of being taxed for everything that you're trying to do? So, most importantly about this concept is the fact that you can also benefit from compounding. So the liquid assets, even if they're borrowed against, they can still compound and benefit from that compound interest. So compounding, your liquid assets is always something good that you want to do as well. So yeah, trading. We talk about trading a lot, and that's something that we like to do. That's something that we like to focus on. That's something that we're very good at. That's something that we can pretty much almost call on a dime. Now, of course, the market does what it wants, so we're not 100%. We're never gonna get on here and tell you that we just made all this money and we never lost. That would not be a true statement. We have lost. We don't lose often, but we do lose. We still lose to this day. I just lost on a Tesla play the other day just because it was an option and it expired too soon. I picked expiration date that was just a little bit too close, and if I had extended it just a little bit, I would have been profitable. But hey, that's just how the ball rolls. And the thing is, you just have to be comfortable with trading and understanding that, you're not going to win every last single trade. But as long as you're good enough to manage that risk, and as long as you're good enough to, maximize your winners, minimize your losers, everything is fine. But with that being said, there are always other ways that you can maximize your money and get more safe investments and more safe ways to compound your money as well, while you're also taking a percentage of money and putting it into a trading. You can put a majority of the money into whatever you want, like some type of saving vehicle, or the way that we're talking about here with the infinite banking, and you can put some into whole life insurance. You can also just buy, a nice portfolio of stocks to buy and hold for X amount of years and just monetize that with options. It's so many ways that you can do this. And we teach all this stuff at Hack the Markets. And we also give guidance. We give just a lot of information because it's so much information here. And with this infinite banking strategy, it's definitely something that you would want to, discuss with an insurance professional, so that you can get it drawn up as specifically for you, understand every last single thing about the contract, how it's structured, what would you would have to pay, all of those type things you would definitely want to talk with a professional about. But this is just a concept that is introduced to you now that you will be able to utilize and maybe even you know be able to grow and pass on some generational wealth to your kids and your grandkids and so on. So with that being said, I'm at the end of the show now, and uh, since it's only me, I only got one pick for you guys. Sorry I don't have everyone else on here tonight. So what I have is MMM. So that is 3M. That's what the company is. They're sitting at a very nice support area. So I would definitely recommend, getting in on some triple M and, seeing how much we can make. Not going to necessarily share too much information about it because, of course, you're going to have to sign up for that information. So I would like to encourage you guys to head over to hackthemarketstrading.com where you can sign up for a premium account. That premium account will give you access to me as well as the rest of the team. And we will be, you also get access, to webinars. You'll get access to trainings. You'll get access to us in a chat. You'll get access to all our trades. You'll get access to a lot of different things and questions that we can ask, that you can ask and we can answer, and all of those good things. So if you are interested in learning this skill and you want to, or you just want to brush up and become better at this skill, definitely head over to hackthemarketstrading.com and sign up for that premium account. Other than that, we have a Twitter that you can follow. So follow us on Twitter, follow us on Instagram, like us on Facebook, and definitely subscribe to the YouTube channel. Like our videos also, so that we can come up in the in the algorithm. So until next time, we will see you guys.